Picture yourself on an ordinary morning, performing that familiar ritual of checking your bank account to confirm your Centrelink payment has arrived safely, when suddenly your heart sinks into your stomach. The deposit is there, but something immediately feels wrong. The amount appears different from what you expected, noticeably smaller than usual, or perhaps the payment has not arrived at all when it should have. In that moment, a cascade of troubling questions begins flooding through your mind, the kind of questions that no older Australian ever wants to confront. Has Centrelink changed the rules again without proper notice? Did I somehow miss an important letter or notification? Am I about to lose the financial support I depend upon just to survive each fortnight? If this scenario resonates with your personal experience, please understand that you are certainly not alone in facing these anxieties. Right now, as we speak, millions of Australians are approaching 2026 carrying identical concerns about new Centrelink regulations, adjusted payment calculations, revised income and asset testing thresholds, evolving digital reporting obligations, and quieter policy modifications that rarely feature on the evening news broadcasts but nonetheless exert enormous influence over household budgets and financial security. Welcome to Aussie Benefits Hub, your dedicated companion for navigating the often bewildering landscape of Australian government payments, pension entitlements, and Centrelink regulations. This channel was created with a singular mission: to serve older Australians, pensioners, carers, and individuals with disabilities who deserve straightforward, honest information delivered without bureaucratic jargon, political manipulation, or fear-inducing sensationalism. At Aussie Benefits Hub, we firmly believe that understanding your rights and entitlements should not require specialized qualifications or professional advisors charging hefty fees. Instead, we are committed to translating complex government policies into practical, accessible guidance that empowers you to take confident control of your financial future. If this information proves valuable to you, we warmly encourage you to subscribe and share these resources with friends, neighbors, or family members who might benefit from this knowledge. Today's comprehensive guide carries particular significance because 2026 is emphatically not a routine administrative update year. Rather, it represents a critical juncture where minor misunderstandings can cascade into substantial payment reductions, while simple proactive adjustments can help you protect or even enhance your entitled benefits. We are going to methodically examine the Centrelink 2026 payment landscape step by step, explaining precisely what is changing, what elements remain stable, where unsuspecting people are being caught out by new compliance measures, and most crucially, how you can strategically avoid unnecessary cuts while ensuring you receive every single dollar you legitimately deserve. Understanding the broader context is essential because Centrelink payments in 2026 are being fundamentally shaped by three powerful converging forces. First, ongoing cost of living pressures continue to squeeze household budgets as grocery prices, utility bills, rental costs, and healthcare expenses climb relentlessly higher. Second, Australia's aging population demographic is placing unprecedented demands on the social security system, requiring the government to balance compassionate support with sustainable fiscal management. Third, increasingly sophisticated compliance systems utilizing advanced data matching technology are being deployed to ensure payment accuracy and detect discrepancies with remarkable efficiency. This combination produces a critically important reality for every recipient: meaningful support remains available, but only for those whose details are meticulously correct, scrupulously current, and structured in ways that harmonize with the established rules rather than inadvertently conflicting with them. For seniors across Australia who are struggling to make ends meet while living on modest pension incomes, the challenges of daily existence have never been more acute. Many older Australians who devoted their working lives to building this nation, raising families, paying taxes, and contributing to their communities now find themselves confronting impossible choices between heating their homes and purchasing nutritious food, between filling essential prescriptions and maintaining reliable transportation, between staying connected with loved ones and keeping utility accounts in good standing. The pension, while providing fundamental support, frequently falls short of covering the genuine costs of maintaining a dignified standard of living in today's economic environment. This harsh reality underscores why understanding every available program, benefit, and entitlement has become absolutely essential for financial survival. One of the most consequential developments people are observing in 2026 is the dramatically intensified monitoring of income and assets by Centrelink. Even recipients who have maintained identical payment arrangements for many years are discovering that automated systems now flag changes with unprecedented speed and precision. Bank interest earnings, superannuation withdrawals, casual employment income, financial gifts to family members, and even extended overseas travel are now being detected and cross-referenced faster than at any previous time in Centrelink's history. This enhanced surveillance environment is precisely where many well-intentioned older Australians find themselves unexpectedly caught out, not because they have engaged in any wrongdoing whatsoever, but simply because they failed to recognise that certain transactions counted as assessable income or required formal reporting to maintain compliance. The Australian government provides numerous programs and benefits specifically designed to assist seniors navigating financial difficulties. The Commonwealth Seniors Health Card offers significant concessions on pharmaceutical costs and healthcare services for self-funded retirees who may not qualify for the age pension itself. The Pensioner Concession Card unlocks access to discounted utility rates, reduced council rates, cheaper public transport fares, and various state-based benefits that collectively can save thousands of dollars annually. The Home Equity Access Scheme enables eligible older Australians to access equity in their homes to supplement their income while continuing to reside in their family homes. Energy rebates and hardship programs administered by state governments provide crucial assistance with electricity and gas bills. The no-interest loan scheme helps low-income individuals acquire essential household items without predatory lending arrangements. Emergency relief programs offer immediate assistance during acute financial crises. The National Debt Helpline provides free financial counselling services specifically trained to assist people managing complex situations on limited incomes. Let us examine income assessment in greater detail because in 2026, Centrelink continues evaluating income from wages, private pensions, superannuation income streams, investment returns, and deemed income calculated from savings and financial assets. The critical issue many overlook is that even seemingly insignificant amounts can adversely affect your payment if they are not appropriately structured or accurately reported within the system. For pensioners undertaking casual or part-time employment to supplement their income, the work bonus provision remains operational, but alarming numbers of people fail to utilize it effectively. The work bonus permits eligible pensioners to earn specified amounts from employment before any pension reduction occurs. However, when income is reported late, incorrectly categorized, or not properly identified as work income, the bonus protection may not apply, resulting in unexpected and distressing payment reductions. Superannuation interactions with age pension calculations require careful attention because once you reach age pension eligibility age, how your superannuation savings are assessed depends critically upon whether funds remain in accumulation phase or have been converted into an income stream. Throughout 2026, Centrelink is devoting intensified scrutiny to how and when people transfer money into or withdraw funds from their superannuation accounts. Substantial withdrawals, even when made for entirely legitimate purposes such as essential home repairs, medical procedures, or vehicle replacements, can temporarily elevate your assessable assets or deemed income if the timing is not carefully considered. Strategic planning around the timing of significant financial transactions can meaningfully protect your pension entitlements. Asset testing remains a determining factor for many payment recipients because the assets test has certainly not disappeared, and in numerous cases, it now serves as the decisive element controlling how much you actually receive. While your principal home continues to be exempt from assessment, virtually everything else matters in the calculation. Savings accounts, investment properties, share portfolios, motor vehicles, boats, caravans, collectibles, and other valuable possessions are all counted toward your total assessable assets. What has notably changed in 2026 is not necessarily the categories of countable assets, but rather the frequency and thoroughness with which Centrelink verifies them. Expanded data matching arrangements with banks, financial institutions, and government agencies mean that Centrelink is substantially more likely to detect significant increases or decreases in your savings balances, even when you have not proactively reported these changes. Deeming rates continue causing considerable anxiety and confusion among older Australians because deeming assumes your financial assets generate a standardized rate of return regardless of what they actually earn in prevailing market conditions. Throughout 2026, deeming rates remain a critical determining factor in calculating your pension entitlement. If your savings are deposited in low-interest accounts earning minimal returns, but Centrelink's deeming provisions assume higher earnings, your actual payment may be lower than expected or warranted by your real financial circumstances. Understanding precisely where your money is held and how various accounts are assessed can illuminate opportunities for improvement. Sometimes modest restructuring of savings arrangements or seeking qualified financial guidance can produce meaningfully positive outcomes for your pension calculation. Digital reporting and online compliance requirements continue expanding as Centrelink advances its transition toward electronic services, MyGov account integration, and digital income reporting systems. For many older Australians who grew up in an era of paper forms, telephone inquiries, and face-to-face office visits, this technological transformation creates genuine stress and apprehension, particularly for those who lack confidence with computers, smartphones, and internet navigation. The important reality to grasp is that missing a required report, even through innocent accident or technological difficulty, can trigger an automatic payment suspension. This does not mean your entitlement has been permanently cancelled, but it does mean frustrating delays, additional stress, and bureaucratic complications while matters are investigated and resolved. Support options for those struggling with digital requirements continue to exist, but you may need to actively request an advocate for appropriate assistance. Supplements and additional payments represent an area where many eligible recipients unfortunately miss out on support they rightfully deserve. Throughout 2026, various additional payments remain available above and beyond your base pension or benefit amount. These include energy supplements, rent assistance, pension supplements, and numerous concession card benefits. Rent assistance deserves particular emphasis because with rental costs continuing their relentless upward trajectory across Australia, increasing numbers of older Australians qualify for enhanced rent assistance without even realising their eligibility. However, Centrelink will not automatically increase your rent assistance unless your rental details are accurately recorded and regularly updated. A modest rent increase that goes unreported could mean you are missing out on meaningful additional support you are entitled to receive. Relationship status assessments represent another area requiring careful attention because whether Centrelink classifies you as single or partner directly affects both your payment rate and the thresholds applied to your income and asset tests. Some recipients mistakenly assume that living at separate addresses automatically results in single status assessment, but this assumption is frequently incorrect. Centrelink examines financial arrangements, living situations, shared expenses, and the practical nature of relationships when making determinations. If your circumstances have changed through separation, reconciliation, bereavement, or modifications to shared financial arrangements, updating Centrelink promptly is absolutely essential. Getting this classification wrong can lead to either underpayments that shortchange your entitlements or overpayments that eventually result in debt notices and recovery actions. Gifting rules create unexpected traps that many generous grandparents and parents stumble into without adequate warning. Providing financial assistance to children or grandchildren during difficult periods is a natural and loving impulse, but throughout 2026, gifting limits continue applying with full force. If you transfer more than the allowable gifting threshold, the excess amount can still be counted as part of your assessable assets for up to 5 years, even though you no longer possess the money. This means your pension payment could be reduced for an extended period despite your diminished actual wealth. Understanding gifting limits thoroughly before transferring any significant funds can help you avoid long-term payment reductions while still supporting loved ones appropriately. Extended overseas travel can unexpectedly affect your Centrelink payments in ways many recipients fail to anticipate. Depending on the duration of your absence from Australia, payments can be reduced or even suspended entirely after specified time periods. Throughout 2026, travel movement data is being more closely matched with Centrelink records through automated systems. Notifying Centrelink before departing on extended trips and understanding precisely how long you can remain overseas without affecting your payment is essential planning for any international travel. The rules vary depending on which payment you receive in your specific circumstances, so investigating your particular situation before booking travel is strongly advisable. Beyond avoiding payment cuts, maximizing your legitimate benefits represents the other crucial dimension of smart Centrelink management. The first essential practice is conducting regular reviews of your Centrelink details at least annually, even when nothing obvious has changed in your circumstances. Consider this equivalent to a health check for your financial entitlements. The second practice involves thoroughly understanding applicable thresholds so you know precisely how much income or assets you can hold before payment reductions commence. This knowledge empowers you to make informed decisions about employment, savings, investments, and expenditure. The third practice recognizes that timing matters substantially more than most people realize. When you withdraw superannuation funds, sell significant assets, receive lump sum payments, or commence part-time employment can affect your payments quite differently depending upon timing within Centrelink's assessment periods. As we progress deeper into 2026, Centrelink modifications will continue rolling out quietly through regulatory adjustments, policy refinements, and administrative changes that rarely attract media attention. Some changes will provide welcome assistance, while others will create new challenges requiring adaptation. Throughout all these developments, knowledge remains your strongest protection and most valuable asset. If you carry away one essential message from today's comprehensive guide, let it be this profound truth: most Centrelink payment reductions occur not because recipients are genuinely ineligible for support, but because something was not reported accurately, updated promptly, or structured in ways that function harmoniously within the established system framework. You have worked diligently throughout your entire life. You have faithfully paid taxes for decades. You have raised families, supported communities, cared for aging parents and young children, volunteered your time, and contributed meaningfully to building this nation. You absolutely deserve clarity about your entitlements, dignity in your dealings with government agencies, and genuine financial security during your retirement years or later life. That fundamental belief is precisely why Aussie Benefits Hub exists, to help you comprehend the system's complexities, avoid unpleasant surprises that disrupt your finances, and make confident, well-informed decisions about your future. Remember always that you are not navigating 2026 alone, and the right information delivered at the right time can make all the difference between struggling and thriving.